So you want to invest? Great. Let's turn you from a hopeless gambler to a financial mastermind. Savings accounts. You deposit money into an account, but it's taxable, and there may be fees involved. Savings accounts are a safe place to store your money, but the interest rates are usually quite low. CDs, not these, but these. A riskier savings account where you lock your money in the bank for a set period. If you withdraw it early, you pay a penalty. The longer it stays, the more interest you can earn. What's the single biggest financial regret of the 21st century? No, not Brexit. It's not buying Bitcoin in 2010, when it was just 1 cent. As of June 2024, 1 Bitcoin is worth £52,000. Cryptocurrency is digital money using cryptography for transaction. Unlike cash, it's not controlled by any government or bank. They use a blockchain, a digital ledger linked by cryptographic hashes. Each block has a reference to the previous block, a timestamp and transaction data. You can buy and sell crypto like shares, or mine it. Mining involves solving complex equations for blockchain hashes. You need to buy expensive hardware and pay high electricity bills. Every 4 years, mining rewards half, and Bitcoin adjusts mining difficulty based on a computer speed. Currently, using a modern high-end gaming PC will get around $1 a day. Not bad for doing maths like this. Intellectual property refers to creations of the mind, such as inventions, literary and artistic works, designs, symbols, and names used in commerce. Owners can earn from it through licensing or selling rights, but protection and enforcement can be costly and challenging. If you think an asset's price will change, options are very useful. Call options give the right to buy a stock at a set price within a time frame, useful if prices rise. Put options grant the right to sell at a set price, useful if prices fall. Both provide flexibility. You pay a small premium to activate them. ETFs hold a collection of securities. They're diverse by nature, so they have limited risk and limited returns. They also have brokerage fees. However, investing in something like the S&P 500 is idea, as it has reliable high returns. Commodities like gold are also a very good investment, as you simply just can't live without them.
Futures force the obligation to buy later at the current price. Unlike options, they must be bought on a fixed date. They're more liquid and have no activation fee. For example, if you're a farmer and you anticipate harvesting 1,000 mangoes in March, if the current market price for mangoes is $10 per mango, you can enter into a futures contract so that in March, even if the value of mangoes drops, you will still be able to sell them for $10. However, if the value increases, you'll miss out on that extra profit. But it's a safe bet, I guess.
But for regular citizens, bonds aren't that useful. Enter crowdfunding. Imagine you're an engineer with a design for an automatic clothes folder while you're broke. Start a crowdfunding project, and if your idea is solid, lots of people will chip in small amounts of money, and in return, they get a reward, like a special copy of your machine. This is known as reward-based crowdfunding. There's also equity-based crowdfunding, where you invest in a startup for a small portion of the company. And if the company profits, you get a cut. But if they fail, you lose everything. Some people invest in many startups to spread the risk and build a diversified portfolio. As if one startup succeeds, it covers the losses of the failures. Debt-based crowdfunding, or peer-to-peer lending. Similar to a bank loan, but faster and often with lower interest rates. It's quick and cheap for businesses and individuals to get money. Student loans are an example of this, but the government gives you money, which you repay after you finish your studying. But if your goal has absolutely no financial appeal whatsoever, go for donation-based crowdfunding. This is just charity, where people donate based on the emotional appeal of your cause. However, don't push your luck, because 90% of these types of startups fail. Also, don't blame my video for it. Blame the meme-watching, Netflix-binging crowd. Once you get some friends, mutual funds are much better. Let's say A, B, and C invest in a mutual fund. One becomes the manager who invests the money in lots of different securities to grow it. A security is just any financial instrument that holds monetary value, such as bonds or stocks. Make it private and you get a hedge fund. Hedge funds invest heavily in specific areas, requiring lots of research on current market trends. Only accredited investors can join, and the joining fee is $100,000. These guys can make millions. Okay, shares. A share represents a company's value, bought and sold with changing prices. Buying a share allows you to own a portion of a company. Selling gives up the ownership for money. There are more buyers, the demand increases, and thus the share value increases. But more sellers make the share value decrease. Pretty simple. To get money from shares, you buy them, and then hope their value increases. This added value is called capital gain. Sometimes companies will also pay you monthly profits called dividends. NFTs, non-fungible tokens, represent ownership of unique digital assets like art, music, and videos, authenticated through blockchain technology. They are bought and sold in online marketplaces, and their value can be extremely volatile. You can make your own or trade them. But in the end, whether it's crypto, futures, commodities, or gambling, it's the slow and steady way that'll make you rich in the end. Well, that's crazy, isn't it? All that information will cost you 1 subscribe and 1 like.